Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. Time in Brisbane, 8:40 a.m. on the 3rd of May 2025. I am recording this video a little bit earlier than I usually like to do. I usually like to record these videos at about 10 a.m. No earlier than 9 a.m. But there is a reason behind that, and that reason is the same reason why yesterday evening, I uploaded an edited version of the ASX Daily Rundown video. That has only happened to me twice before, where I've uploaded the unedited version. I'll talk about why I did that. My mind was completely focused on something else, and I'll discuss the new computer in a second. Now, typically when I start recording a video, any video, I like to do a few takes at the start. So just a few starting takes. So the first few minutes, how I'm going to start the video, that sort of thing. And typically I'm never happy with how I do the first take. So I go back and start it again. Sometimes I go straight through. But after I'm happy with the first second or third take, I then go all the way through. So typically, I don't need to do a lot of editing on my videos. I just have to delete the takes I'm not happy with, and then also delete right at the end of the video where I've stopped talking and I hit the stop record button. So there's a little bit of empty time there, or empty space time, whatever you want to call it there. So very little editing on my videos, but on occasion, twice now, I will upload the unedited version. And so I will re-upload those if it happens. And both times it happened, so last year I think it was on Pro Medicus, and then yesterday, my mind completely focused on something else. And yesterday, my mind was focused on fixing the computer. And I'll give a bit of an update. So after I finished recording, I went to try to fix the computer. There's a lot of resources online, but nothing worked at all. So I decided to speak to an expert, an Apple person, and they were helpful. Took me all through these different steps to try to fix the computer. Nothing worked at all. And eventually she just said, you're going to have to send the computer to the Apple store and see if they can fix it physically on site there. And if not, they'll just give me a new computer. So hopefully by this afternoon. So she also helped me set up a time where I can take the computer into the Apple store in Chermside, and hopefully they'll be able to fix it on site. And by this afternoon, I'll have a new computer, whether it's this computer now or they'll give me a brand new computer. Okay, so that's where I'm at right now. Less concerned now than I was last night. Okay, so let's go back 7 days ago to a frustrated Bill Walton, who says all these public holidays, and remember we had 3 public holidays in 10 calendar days. These public holidays lately are frustrating when I need to make money, and Bill received 9 thumbs up. His comment, 9 thumbs up. Trader Hooper also mentioned in a reply that we just had a lot of public holidays in a row, which makes it seem worse. That's absolutely true. Now we have one more public holiday in June, and I will talk about that in a second. And there are no ASX public holiday closures until Christmas. I'm pretty sure ASX is closed in June. I could be wrong about that. So even if it is closed in June, we only have one more ASX public holiday until Christmas. So that's more than 6 months. And yesterday, when I was notified that my computer might not arrive until Tuesday, I was thinking, why can't it arrive on Monday? And then last night, I found out that Monday, the 5th of May, is a public holiday in Queensland. I believe it might be Labor Day. Yeah, I'm pretty sure it's Labor Day because we have the King's birthday in October. So we have a public holiday in June. We have Ekka Day in Brisbane in August. So that's not whole of Queensland. Everyone has their different city holidays, whatever it's called. And then we have the King's birthday in October because they wanted to space out the public holidays. That's why they changed one of the public holidays from earlier in the year to October. We didn't used to have that public holiday in October. And then we go into Christmas. And I'm pretty sure the ASX might only be closed in June, which is June, ASX public holidays. So let's just verify this. I'm wondering about this now. Yeah, the 9th of June, which is King's birthday, that's New South Wales. The King's birthday in Queensland is October, and I'm pretty sure that New South Wales celebrates Labor Day in October. I'm not sure. Anyway, so only one more day until Christmas when the ASX is closed, 9th of June. Fun enough, that's our self-settlement of my house here. That's on the 6th of June, 8/7, which is a Friday. Interesting. So less frustration for Bill Walton for the rest of the year until we get to Christmas, and that is a frustrating time between Christmas Eve and just after New Year's Day. Okay, next question is from Alejandro Zarate. Hi, Kneppy. As always, great video. Thanks heaps for it. What's your thought or strategy for Clarity? You reckon is good time to buy? Share price of Clarity has gone bonkers lately, hasn't it? I was thinking if the share price kept on falling, I'll add to my position. And up 14%. In fact, you have a look at trade history. It's just a few days where the share price has gone up about 10%. The low in the share price was about $1.43 on the 9th of April. So share price has gone from $1.43 to $2.60. It's almost doubled in a fairly short period of time. If you have a look at the chart for Clarity as well, the chart's probably still in a downtrend because the share price had fallen a long way. So I wouldn't be surprised if this is just a bit of a bounce because it was significantly oversold. Now, my strategy with Clarity is fairly easy. I'm not trading it. This is a longer term hold. Trader Hooper also mentions Alan Taylor. I would definitely recommend listening to Alan Taylor Clarity interviews on YouTube or anywhere else. Really informative and like to give you more confidence in Clarity and what they do. I actually also recommend that as well. Now, the last interview I listened with Alan Taylor was not that long ago. It was a few weeks ago, I think. My only problem is he does talk a lot about Telix, and they are competitors. And one of the reasons why I actually started to look at Clarity was because of my position with Telix. I just wanted to know the competitors. And then the more and more I looked at Clarity, I went, oh, this could be a significant disruptor for Telix. So my original position in Clarity was as a hedge against or for Telix. And then the more and more I look at Clarity, the more I think, well, this could be a big player in this space. So I do recommend having a listen to Alan Taylor. And the way I'm looking at Clarity is not as a trading position, but more of a long-term position. So that's my strategy when it comes to Clarity. And I was sort of hoping the share price would fall a little bit more. If it fell below $1, I probably would have been adding to my position at that point in time. Anyway, I'll always recommend know why you're buying into a company, what is your strategy, and make sure you understand why you have that strategy, why you bought into a company. And I have that for every single position I have, whether it's a long-term position, short-term position, or trading position. Why have I bought a position in a company? Just James Dean says Billions is 100 times better than Chernobyl. I don't know if I'd say that. No, by the way, I did watch Billions. Yes, that is one show I watched. Any show like that, I will watch, absolutely. But I'm not sure if I'd say Billions was 100 times better than Chernobyl. I liked Succession. That's another show I really liked. In fact, I would say it's really weird because if you go back 20 years ago, I was more of a movie person than a TV show. In fact, I watched very little TV 20 years ago when I was in the United States, very little TV. Now I'm the complete opposite. I think TV is much better than movies, and it's easy to understand why a lot of the film actors are now going into TV because at this point in time, I do believe it's a better medium. Social medium. I don't know what you call it. Anyway, thank you for that, Just James Dean. And yeah, if you've never watched Billions, I do recommend it. It's a good show. But it's not amazing quality, but it's a good show. Just James Dean also said there is a bloke in SG. What's in SG? What's SG? Whose YouTube channel is mainly about REITs. Basically, wait till there is a market crash a crash and throw everything into REITs at half price, then do nothing until next crash. While waiting, collect outsized yields. I actually think this is a really good strategy. Yes, I think this is a really good strategy because REITs will be crushed during a. If we go into a significant recession, REITs will be crushed, and even now they are trading well below net tangible assets. So I don't think you can go too wrong now with REITs. But if there is a crash, I do think they will fall. And I think this is a very viable strategy. Not exactly for me, but I think there are so many strategies out there. I think you do have to find one that you do like. That suits you. And I absolutely believe that. I'm not a big fan of those experts who say there is only one strategy and that's a strategy I use. Every other strategy is useless or pointless. What's his name? Phil Town said that once in one of his podcasts, and I stopped listening to him after that. He said, the only strategy that works is the strategy I use. He's a bit of a Warren Buffett fan. Pretty sure he has a shrine to Warren Buffett. And as soon as he said that, I stopped listening to him because I believe every single investor is different and you have to find the strategy that works best for you. And this sounds like a legit strategy. I could definitely see that working. Sham G says, oh, hi Kneppy, I trade US markets mostly. Here's some stocks worth a look at. So I love when you give me some ideas. Now I have heard some of these like PEGA Systems that has popped up recently because they released their quarterly and share price popped up. And I haven't looked at this company with that pop up, but this is exactly what I'm looking for. Share price falling. Share price, they release a quarterly, share price pop up. Now, the only problem I have with American companies is you'll see the share price can be very volatile. All companies can be very volatile on quarterly. So they seem to be more short-term fixed than medium to long-term. And we saw that with PEGA Systems. Looks like the share price dropped significantly in February. I'm not sure why. It dropped on one day, dropped 19.6%. And then when they released the most recent quarterly, so share price went up 28.78%. So you can see a lot of volatility in American companies just because of their quarterly. But I have a closer look at PEGA Systems because of that quarterly. And some of these other companies I've never heard of the TIG codes. Where is it? Oh, here it is, sorry. TSSI, I have heard of this one. Now, some of these I have seen the TIG code, but I can't tell you the company. So TSS, you can see the share price has pulled back, but the chart before that looked pretty good. I'm pretty sure now is ServiceNow. Is that ServiceNow? Yes, ServiceNow. So I have heard this one. And it looks like they also released a positive quarter on the 24th. Share price up 15.5% on that day. What are the ones? TXN. Is that Texas Instruments? TXN. Texas Instruments. Definitely have had a look at this one. Share price has fallen a fair bit. This one might be looking good. I might classify Texas Instruments as a high quality company. So this is how I would look at it. Look at the long-term chart and share price is below the 200-week moving average. So now could be a good time to have a look at Texas Instruments. So I'll go through the rest of these. I'm trying to think of the other ones I do know. Yeah, so I really started my US trading journey or investing journey about 3 or 4 years ago. And that's when about 3 years ago. In fact, it was PayPal. I can actually tell you exactly when I started buying PayPal. It was PayPal, first one. Share price had fallen a lot. So this was 2022. So I can tell you exactly when. So I started entering into the US market in March 2022. So it's about 3 years ago. And yeah, PayPal dropped a lot. And then I actually added more, not quite near the lows, but close enough. And I think this one eventually will turn upwards, fairly cheap as well. P/E ratio 14.77 for a company that is growing. And so that's exactly what I'm looking for, potentially high quality companies that looking good value, which is how I started investing. That was my investing strategy. And I'm using that in America. In fact, some of the more or higher quality companies are looking quite cheap, particularly when you compare it to CBA. Compare some of these companies to CBA in terms of valuation, and they're looking really attractive because they have significant growth ahead. CBA doesn't. Anyway, so thank you for that list of companies. I'll have a look at some of these. Gazmo, I think this is Gazem, and just put the 0 there because that's a 0, I think. And so Gazem 0. Hi, Kneppy, make sure you get an independent building inspector. Funnily enough, I was watching YouTube the other day, and it must have known that maybe I need some sort of independent building inspector. And it was this guy that was in Canberra looking at this building, and the building standards on this building in Canberra was absolutely shocking. He went through all the bad things. It wasn't even built to the plans. It was against the building plans, and the building or the builder tried to get the owners to sign off on it. And I think they got in contact with this guy. I don't even know what the channel's called. It was like 30 minutes long, going through the house and all the bad things about the build, that sort of thing. So it's really interesting that you mentioned this. And then for some reason, YouTube has just been providing me some recommendations for these videos about building inspectors going to sites and just going through houses and seeing how bad or good they are. So yeah, definitely a good suggestion, getting an independent building inspector. By the way, I did receive the plans yesterday or the day before. No, it was yesterday. I am going going next Tuesday and Wednesday, going to the tile place, checking, getting tiles approved, that sort of thing. Electrical the next day. So I do want a little bit more PowerPoints through the house, and also going through the colors like carpets and the roofing, the driveway, colors of the garage, and all that sort of fun stuff. And they told me expect that to be an all-day thing. I'm not looking forward to that day at all. Trader Hooper gave me some nice feedback here. I do like the article commentary videos, but I find the daily videos most useful because they're helping me to develop better habits. There were so many announcements today, and it was hard to keep up. It's easy to see why a list is required for the ones to read in more depth later. So much information, that's true. The BOC production report made me laugh. Okay, so I will be honest here. I do find the ASX Daily Rundown videos to be my favorite video. And the main reason behind that is usually I just record all the way through, apart from maybe having 1 or 2 takes. So that could be like an hour video, takes me an hour and 5 minutes to record. Some of the other videos, particularly if I do like a PowerPoint presentation, they can be a little bit more editing there, because sometimes I'll do a take per slide, and I don't like those videos. And it also requires way more, what's the word? What's the word? Sometimes words just get stuck in my brain. It needs more time to develop the video. No, it needs more preparation. That is the word. Can't believe I couldn't find that word. Some of those videos need more preparation. The ASX Daily Rundown video, sometimes it needs 0 preparation. I can do one of those videos with 0 preparation. I do like a little bit of preparation, but not a lot. So anyway, so I don't plan to stop the ASX Daily Rundown videos until I go overseas for 2 months. I don't think I'll be able to do those videos at all. But those article reaction videos are very popular. I'm surprised how popular they are. I've always made fun of reaction videos, people watching like another video and reacting to that video. And then there's reaction to reaction of reaction videos, which I find astounding. And I didn't realize this would be so popular until a few years ago, when my nephew went around to my parents' place and he was at the computer, and then he came back and he was just watching someone play a video game. It's like, why would you watch someone else play a video game? But that's when I realized, after talking and chatting, that this is very popular. People just like watching people do stuff, which I find bizarre. But anyway, Jake Chard says, can you please cover Frontier Digital Ventures after today's positive update? Was it that positive? Oh, share price has dropped a fair bit. So when was this? This was on the 20th of April. Did I mention this at all? I can't remember if I mentioned Frontier Digital Ventures. Let's see how the market reacted. Yeah, share price not up all that much. Share price of Frontier Digital Ventures has been floundering. I'm just waiting for a little bit of momentum in this company. I can't remember this one much at all, so I'm going to open it up see if something can trigger a bit of memory. And so the main thing I'm looking for here, I don't think they don't release the pennies 4Cs anymore. They used to, but not anymore. Positive free cash flow, that's good. 8 to 246% EBITDA growth across all regions. That's good. Revenue growth, Zameen improvement. That was the Pakistani something or other that had shown a little bit of weakness lately. So revenue up 22%, EBITDA up 267%, and cash balance up 0.6 million. So just looking at the highlights, yeah, it looks like the company is getting some momentum. First quarter 2025 free cash flow. Oh yeah, I remember seeing this now. Yeah, so this is definitely a bit of a bit of a positive spin. They are free cash flow positive, so that's pretty good. So, and then they go through all the different. I also remember seeing this one, group operating revenue. So it's really not going anywhere just yet. I want to see the group operating revenue actually increase. It's okay that group operating EBITDA and free cash flow is increasing. I want to see operating revenue increasing as well. So that's probably the next step for me. LATAM trading update, I want to see this increasing as well. So there's a few positive things about Frontier Digital Ventures trading update, but I need to see a little bit more positive coming through for this company. Now, in saying that, the share price has dropped a fair bit. I used to own this company, then I sold out. When did I sell out? I sold out, I think I sold out on one of these rallies. I can't remember exactly when. And then just decided all I'm going to do with this company is wait for a little bit positive momentum in the business, and then I might take a longer term position. At this point in time, not really seeing that. Share price has got to a low of about 20 cents, now at 27.5 cents. So possibly we could see the share price moving into an uptrend soon, maybe, if we continue to see the share price go up. The other thing you'll notice, pretty good volume coming in. From the end of last year into the start of this year. So that could be a good sign as well. Like to see a nice increase in volume, which is a sign that maybe fund managers get interested in a company. So I think a better trading update from Frontier Digital Ventures, but for me personally, it's just not over the line just yet. K23 Man says, Kneppy, thanks for the videos. Given you invest in US shares, I'd be interested in understanding what is involved as far as completing your tax return. How do you track exchange rates when you buy and sell? Do you need to pay tax in the US? So a lot of so I buy US shares through my super. So they handle everything. They handle everything. I don't have to do anything there when it comes to my super. And also buy through Superhero. And all I need to do was sign some document, and they take care of everything else. So I'm not sure if other platforms do that. But at this point in time, the other thing I should also mention is when I decided to invest through Superhero, I did exchange, currency exchange at that point. So I put, how much money? I put 15,000 Australian dollars into the account, and that was exchanged to US currency straight away. So I just trade US currency. So when I'm trading, buying and selling, it's all in US currency. There's no exchange when I do buy and sell, because that's how they do it. You exchange it first, and then you're trading with American dollars. And I'm pretty sure they take care of all the tax as well. So at this point, I don't have to pay any tax. I have more trouble with my YouTube channel when it comes to tax in the US than any of my investments. So hopefully I've explained everything there. I think it all depends on your platform. Not sure how other platforms do it. VBEd, g'day Kneppy, good day, 4 days ago, 4 days late. Can you please do a review analysis of Inghams code, ING? The shares seem to be an uptrend. Dividend yield is also great. They are in a poultry duopoly situation with Steggles as a main competition. Some say, Morningstar, that stock is a profit trap, and I don't understand why. Morningstar, I'm not a big fan of Morningstar. They just mentioned that Telix is significantly oversold and doesn't have a moat. No, significantly overvalued, doesn't have a moat. I sort of understand where they're coming from, but it's a bit of a stretch saying they don't have a moat because they've increased their revenue from nothing to $1 billion in a few years. You have a moat if you're able to do that, but there is competition. I understand that. So I don't agree exactly they have zero moat. Anyway, Ingham, let's have a look at the chart first. which is not what I usually do. So Ingham, the chart doesn't look half bad, but you notice at times you do see the share price drop a lot. So 12% in February of last year, and share price dropped a lot in August. So the last 2 times they've released results, excluding February, share price dropped a lot. So it seems like the bad news has already come in, and looks like the share price probably popped up when they released their results on the 24th of February. Share price dropped on 13th of March for some reason, 7.29%. Let's have a look. 13th of March. 13th of March, nothing. They released the results on the 21st of February. And yeah, the share price actually did go up 2% on that day, and then a further 5% the next day. And it looked like it was breaking out. And this, for some reason, share price pulled back. Share price is at a long-term high. We're talking about over a 6-month high. I do like that. The chart actually looks pretty good. I do like this chart for Inghams. I'm not sure if I would classify this company as high quality. P/E ratio 14.6, dividend yield 5.4. That looks pretty nice. One of the problems they had recently was chicken feed and the price of chicken feed. So that is one thing you do have to take into account, that if chicken feed becomes more expensive, that will affect the company. So let's have a look. This is what I usually do if I don't know much about the quality of a company. I'll just go to FinChat and I'll quickly go through some of the financial metrics. This is a very rough way to do it, but I think overall this is a good start. And then if you do like what you see, and this is what I do, if I like what I see, then I move to the next step, take a closer look at the company. So with Inghams, market cap is 1.28 billion. Enterprise value 2.77 billion, which straight away tells me they have a fair bit of debt. So if I'm looking at this company, I'll focus on the enterprise value, which is about 2.8 billion, because net debt of 1.5 billion, that seems a lot. Now, that could be because of leases. So a few years ago, before the, what was it, AASB 20 or something, maybe it's 16, AASB 16, before then, Inghams wouldn't have as much debt. I'm making some assumptions here. Anyway, revenue of 3.23 billion. So that's a fair bit of revenue. And I do buy Inghams products. I actually do have to admit that. I do buy Inghams products. The last one I bought was some Southwest chicken pops, which I put into a salad. Really nice. Really, I do like Southwest flavored stuff. Southwest American, I think it is. A little bit of spice there. The next thing I look at is margins. Yeah, gross margins 18.3%, operating margins 6.3%. I would expect the margins for this company to be that strong. Then I'll also have a look at return on equity, 38.7%, return on invested capital 6.1%. I do tend to focus on return on invested capital for these type of companies, and return on capital employed 9.1% because they have a lot of debt, leases. But anyway, so close to being a quasi high quality company. Revenue growth, we don't have 10 years, so they've been listed on exchange, I would say 7 years. I still remember when this listed. Oh, close. So yeah, late 2016. So what's that? So we're in 2025. So just over 8 years. The other thing is, if you have a look at the weekly chart here, this is not the chart of a high quality company. So that's another thing. It's sort of another clue that, yeah, maybe this is not a high quality company. Does go up and down in trends. So if you catch a good trend, you can do well, but maybe not a long-term hold just because of that. If we go back to this, so revenue growth over the last 5 years, 5%, earnings per share, 5.8%. It's growing at I'd say that's an anemic level growth rate. I'd probably prefer growth to be higher. Dividend yield 6.1%, dividend payout 78.8%. So the returns for this company, if you look at the revenue, earnings per share growth, add that to the dividend yield, we're talking about 10% growth over the long term. And if you have a look at the total return, so it's growing. This company's growing. And if you have a look at the max total return, 6.7%. So I would have expected that to be a little bit higher. So for me, if I look at the total return since it listed 6.7%, then I look at the revenue growth, earnings per share growth, Also have a look at the dividend yield. I probably would expect higher than 6.7%. So in a way, I think this could be cheap. I think this could be actually good values or good value at these levels. P ratio 14.4. Some of the other metrics look good. Price target, PE ratio next 12 months 11.9. And I'm just going to have a quick look at this. So have a look at total revenue. So I probably would expect a nice growth. Yeah, nice solid growth. Solid, I'm not sure about solid, but got there. And the other one is PE ratio, which is, if it comes up, just take your time. Just take your time. I'm in no rush. If you have a look at the PE ratio, it's all over the place, this one. So I would assume their profits, I'm going to have a look at the profits as well. PE ratio all over the place. It does get as low as like 12 on occasion. And it's towards the bottom end of the PE ratio range, isn't it? So towards the bottom, which means possible good value. The only thing I'm going to look at is just the EV to free cash flow. This probably is all over the place as well. Apart from the 1 year, yeah, it's sort of in the normal range. And the last thing I'm going to look at is just the profit. I just want to see if there was any sort of unusual number in the last year. Oh, come on, just take it. Oh, this is P. Oh, they've changed this, right. They used to go from earlier at the start here. So they used to have earlier. So the early, like 2016 at the start, and then go to 2024 at the end. But they've just shifted it. So something has changed with FinChat. Anyway, let's have a look at that profit. Sort of like what they've got here. The start is at the earlier period. So June 2015 is at the start here, and then the most recent year is towards the end of this, which is the way they should do it. But in their columns here, they've got it completely different. Anyway, you can see the profit is all over the place. So would I completely focused on this year's profit, 101.5 million? Maybe it's a little bit elevated, but you can see the profit goes up and down. So just because of that lack of reliability when it comes to their profit, I think there are questions about this covered. But I think there is definitely an argument that there might be some value with Inghams at these levels. Scott also says horrific ESG points on that one, ignore. Not sure what that is. Profit trap. I'm not sure what they're talking about, profit trap. But yeah, I don't know. It's for me, Inghams would not be a long-term hold, but there are times when I think it is a good company to hold for short to medium term. And I think if you get it at value, yeah, it's at least a short to medium term hold. Just James Dean says, what's going on with shipping is a channel you want to follow. Oh, okay. What's going on with shipping is a channel you want to follow. So apparently there is a channel called What's Going On with Shipping. I have no idea. Let's have a look. There we go. What's going on with shipping? That could be a really good channel to follow. Thank you, Just James Dean. Is a channel you want to follow. Sal explains the trans-Pacific shipping. Ships regularly cancels sail, just moves the containers to the next ship, which makes perfect sense. So I heard all these contradictory comments saying ships always leave at a certain time, and they will leave even if they're only 40% full. And ships now are leaving at 40% full. And then there was another comment saying, look at all these ships in China waiting for loads, and there's nothing to be shipped. And that's why we see lots of ships in China. So a lot of contradictory comments. I think a lot of people just hear something and they just believe it. So that's a problem with people that today, they just hear something, and then they just believe it forever. Robert John Reed mentions, is Zip involved in a court case over naming rights? I completely forgot about that. I think they did have an issue with name in Australia. Yes, there was an issue with Zip recently in regards to the name in Australia. Let's go back. I'm pretty sure the share price dropped overnight because of Block. That's right, Block. Share price dropped a lot because of their quality. And Afterpay, remember Block bought Afterpay. So maybe some fears about Afterpay, but Zip did release a really good quarterly. There it is. And they also released, I'm not sure why they're doing an on-market share buyback program. Jeez. And when was this? what they need in ComSec is a filter on the homepage of companies where you can just filter out non-market sensitive information. I'm pretty sure Market Index has that. Oh no, it's not that far away. There was something about here it is. Zip intends, it was not market price sensitive. Zip intends to apply for special leave to appeal decision. This was start of April, so not that long ago. It's about a month ago. In regards to infringement claim, trademark infringement claim against Zip in Australia. The federal court decision in First Mark's favour follows Zip's announcement on 1st of June 2023 that Zip has successfully defended the claim, including succeeding in both its non-use claim in relation to the First Mac mark, as well as, whatever. Anyway, so who knows where this is going to go. Share price, I'm pretty sure on the 2nd of April did drop in regards to that. Let's have a look. We have to go to the daily chart. 2nd of March. Yeah, it dropped a little bit. And we saw the share price drop significantly after that, and the share price has rebounded. And one of the reasons the share price has rebounded because of their quarterly. Anyway, so I think we're going to see a lot of volatility when it comes to share price and the chart of this company. Okay, next question. Woodside. VBEd again. To me, the stock of the day was Woodside. There was a huge announcement concerning a new investment they have made in Louisiana LNG project. This will transform Woodside into being a future global leader in the LNG industry. Unfortunately, this huge announcement didn't really move the share price on the day. DevShaw is also accumulating Woodside at the current price. I think it's one of the underrated company at the moment. And VBEd is also accumulating. There is a lot of potential upside from here. I will have to be honest with you. I've been looking at Woodside a little bit more. And the main reason is, so the daily chart looks pretty awful. But I was thinking, share price about $20 could be a good buy, or anything under $20 could be a good buy for Woodside Energy. I'm not talking about long-term buy. I'm just talking about a good potential value buy. So I do think there is potential value when it comes to Woodside. But if you have a look at the weekly chart, definitely not a company you would want in your portfolio for the long term. Now, maybe the future is looking brighter. I don't know, but I'm just looking for this as a value play. I do think there is potential value for this one. Also potential value, I think, for Karoon and maybe even Santos. And I was thinking under $20 could be a good buy for Woodside. Otherwise, that particular announcement, I did actually see it, but then I just moved on. Not the sort of announcement that would move me. So Woodside approves Louisiana LNG developments. Might have to look at is this a presentation? I'll have a look at this presentation. So it's funny enough, when I do trade a company, so if I actually decided to trade Woodside, by say, I think it was good value here, so buy position Woodside, but I don't intend to hold it for the longer term, I will take more notice to their announcements. It's weird. But I think when you're trading, you probably shouldn't do that. It doesn't really help because this is more of a longer term thing. Anyway, creating a global LNG powerhouse. Yeah, so I'll have a closer look at this. So I'm definitely thinking of actually trading Woodside. It's definitely on my watch list, DevShaw says, hi, Kneppy, would you please cover BPM Minerals, BPM? So here is one company I don't know anything about, BPM Minerals. Share price up 10.7% on Friday. Let's have a look. So typically, when it comes to these companies, are they an exploring company or are they in production? I'm assuming, because I don't know anything about this company, they're exploring company. A lot of times you can just tell by the first page of their Appendix 5B, yep, they're exploring. If they're in production, they would mention they're in production and what their production has been. And we can confirm that by looking at their cash flow. Yep, no cash flow. Very little cash burn. 487,000 exploration and valuation. How much cash they have? It's gone from 2.6 million to 2 million. So they have on that cash burn rate, they have 3 to 4 quarters of cash, and they don't have to answer question 8 because it's more than 2. So yeah, know nothing about this company, a gold company. So I would assume if they are an exploring gold company, and if gold prices continue to go up, we're going to see some of these gold exploring companies, their share price should rally a fair bit. We're starting to see that, I noticed. For instance, let's have a look at BPM first. Oh, okay. So this one is not rallying at all. This one is just going down. And I would assume some of these spikes in share price could be some drilling results. So I did not expect this. I expected the complete opposite. I expect the share price to start to be going up. For instance, Emerson. I think it's Emerson. This is a gold exploring company. Share price taken off. There could be reasons behind that as well. Company-specific reasons behind that. Rox Resources, unless they change their name. No, there it is. One of this is doing the same. Yep, doing the same. So we're starting to see these exploring companies going up. There was another one I was sort of looking at a few years ago, Pack Gold. I think it's Pack Gold. I can't remember the T code. Pack Gold. PGO. Let's have a look at this one. Oh, this one is not. So we're not seeing this with all these exploring companies. But if gold prices keep going up, the positive momentum should transfer eventually into these exploring companies. That is what I would assume, but it's not happening with some of these companies yet. Other than that, I know nothing about BPM Minerals. In fact, I'd say you probably know way more than I do about this company. I have never looked at it before. And I'm not going to go any further because they have no revenue, no cash receipts. I can't look at FinChat. It's useless because this is a story stock. Trader Hooper. What caught my eye with RemSense, love the code and the music. So I used to work with a guy who was a huge fan of REM, massive fan. I liked some of their music, and he actually did get me into REM a little bit more, just because of his enthusiasm. So I thought, oh, he must like him. If he likes him, maybe I should listen to more of their music. And I do like REM. Yes, I do like REM. Was a caliber of the companies they work for. Woodside renewed their subscription with them, and they do work with Chevron and Newmont. Good names to be able to drop. I hadn't heard of them prior to today, but the name dropping caught my eye, and their technology seems interesting, definitely eye-catching. So this one caught my eye 1 quarter ago, and it's re-caught my eye again. And yeah, name dropping. It is interesting. So if all these big companies like this small company's products or service, then obviously they're doing something right. So virtual plant. I'm going to have to read about this one a little bit more. So what I'm going to do over the next few weeks is go through all the Appendix 4Cs I do like and learn a little bit more about these companies. So yeah, I do. So RemSense. Let's have a look at the chart for RemSense. Oh, that's right. Yeah, the chart, I think, looks pretty good. If you have a look at the longer-term daily chart, the share price is going to turn positive. I do like this chart. I do like this chart. Now, I think just based off what we have seen since January, and that is the month that RemSense caught my eye. I can see really big volume coming through late January when they probably would have released their Appendix 4C. And you can see how volatile share price has been since then. So there's a chance you could get the share price at a lower price than it is now. But what I could do, is just take an initial small position in the company. And the reason I sometimes do that is if I take a smaller position in the company, and this is absolutely true, you tend to follow that company a little bit more closely. And I could do that with RemSense. I've been impressed with their last 2 Appendix 4Cs. And the first time I was impressed, and then I forgot about the company until the 30th of April. So not that long ago. Just James Dean says, please review Mastercard in Sunday's video. Thank you. So Mastercard, or Sunday's video, is the technical update. So I'm not sure if you wanted me just to do a technical update of Mastercard or to have a closer look at the company. So this is definitely a company I would buy. I would classify Mastercard as a high quality company. So let's have a look. Now, this is without me even taking a close or deep dive into the company. So let's have a look at the overview of Mastercard in FinChat. Now, you probably could do the same thing with Visa. I don't think there will be much difference between the two companies. Okay, so market cap is $500 billion, not much debt. I wouldn't have thought this company would have much debt. Revenue of $29 billion, 35,000 employees. Interesting. Only 908 million shares. That's the other thing. Some of these big companies have a lot of shares. We're talking about billions and billions and billions. I'm okay with that. I'm not okay with smaller companies having billions and billions of shares. That is an issue. Gross margins 100%. Yep. Operating margins 58.6%. You'd expect this company to have really good gross margins and really good margins. Return equity. You'd expect the return equity and return invested capital to be really good as well. I'm not sure about this return equity, 158.7%. So return invested capital is 39.2%. So that should be good. I would have expected that to be really good. Revenue growth, we're talking about 3, 5, 10-year revenue growth between, we'll say 12 and 14% per year. And looks like it's fairly constant growth. Earnings per share growth between about 13 and 16% per year. So nice earnings per share growth. And because earnings is growing faster than revenue, that would imply that margins have increased. Dividend yield, I don't think you'd buy this for the dividend. Dividend yield 0.6%, payout 19.9%. And then dividends been growing at a nice rate as well, between 14 and 18%. So this has all the makings just by looking at this. That is a high quality company. Now on valuation, P ratio 38.4. Just based off the growth. So if you have a look at revenue, earnings per share, and dividend yield, you'd expect the returns of this company to be probably at around 15% per year. So let's just go back through the last 10 years, look at the total return. And we'll go back 15 years. No, not 15. We'll go back 10 years. And it's at 20.6%. So it's a little bit higher than what I would expect, but that's a pretty nice return over a 10-year period. Now, because that's a little bit higher than what I would expect, I think there is a chance that we have seen some multiple expansion over the last 10 years. So P ratio of 38.8, 38.4 might be a little bit higher than what you usually see for this company. Let's see if that is right. P ratio. Yeah, it has increased over the last 10 years. So 10 years ago, it was below 30. Now it's closer to 40. So we have seen multiple expansion. Now, during that period, we have seen the P ratio being as low as during COVID-19, as low, it doesn't get there, does it? 26.6. Now, in 2016, it was at 24.7. So that was a time to buy. It's been as high as 59, almost 60. So now it's sort of in between the low and the high. So fairly valued, maybe, fairly valued. And then have a look at the chart. And this is going to be the chart of a high quality company. Mastercard. I assumed it was just going to be MC. Am I wrong? MA, okay, MA. And Visa, I'm pretty sure Visa is just V. I could be wrong. Let's have a look at Visa. Yes, V. Okay, so let's have a look at the weekly chart. And I do like having a look at the weekly charts because it does sort of filter out the noise. And, oh, geez. So Mastercard. We're not in the weekly chart. There we go. That's the weekly chart. And yeah, this is a chart of a high quality company. In fact, if you go all the way back, so they listed, looks like in 2006. And if you have a look at the 200-week moving average, only once has the share price fallen below the 200-week moving average, and that was in October 2022. I should have been following this company a little bit more closely at that point. That was a great time to buy. So that was at $275, and the share price has more than doubled since then. There you go. So this is the chart of a high-quality company. Sometimes you can just have a look at the chart and go, this is quality. And also, you can look at this chart and go, yeah, it might be a little bit overvalued here. So share price is well above the 200-week moving average, but even then, even if you buy when it might be the valuation slightly elevated, over the long term, you're gonna see a valuation, or you're gonna see a holding increase in price. So Definitely one of the companies that I do think is high quality. That's not in my portfolio, and it can belong in my portfolio. Pre-etigarang sounds like Filipino or Indonesian. Gurung. Hi Kneppy, what do you think of AQN? Thank you. I know zero about AQN. Let's have a look. AQN. Aquirian. Oh, Aquirian. I do know this company is a real company. They do sell something. They did not release it in pennies 4C. That's probably why I haven't followed this company closely. So I'm pretty sure they used to release it in pennies 4C. Yeah, there we go. July of 2024. And it looks like they were told by the ASX they didn't have to release that anymore. So there must have been operating cash flow positive. Let's have a look at that operating cash flow of that pennies 4C. So I'm trying to remember what this does. There might be like a mining services type company, that sort of thing. Anyway, let's have a look. They were cash receipts $7 million, operating cash flow positive $1.5 million. If you look at the year, they're operating cash flow positive by $6.4 million. Now they might have, they do have a bit of property, plant, and equipment, so they're actually free cash flow negative for the year. And what they do, mining services and something else, people services, mining services, people services. That's right. So let's have a look at the most recent half-year results. What I'll do is have a look at the half-year report in pennies 4D. Just have a look at the numbers, financial statements. So revenue, $13.2 million, or 13.3, so not a lot of revenue, and slight loss for the year. Now, a slight loss for the year doesn't necessarily mean it's a bad thing. I also like to have a look at the balance sheet. So equity is at 10.8 million, so very small company here with that sort of equity. I'm looking at debt. They have a bit of debt. Borrowings at 10.4 million. That's not including leases. A little bit of cash, a little bit of receivables, a fair bit of property, plant, equipment. So a little bit of debt is a little bit concerning for me for this type of company. By the way, this company has a market cap. I would assume it's like $20 million, maybe. $31 million, that's close. And the last thing I like to look at is the cash flow statement. So barely cash flow positive for the half year, 369,000. Last year, they're operating cash flow positive, 3.6 million. So and free cash flow positive, slightly. So not for me, this one, just by looking at very quickly at their financial statements, not quite for me. I'm going to have a quick look at this. Aquirian. Let's have a look. Very quick look. Don't expect to see anything exciting here. Actually, not much data at all. Not much data at all. So that was sort of useless. So let's have a look at the chart. So you're going to see a completely different chart than Mastercard. Much smaller company. Have a look at the daily chart. It looks like it's illiquidly traded. That's just by looking at this daily chart. Very liquidly traded. Share price about I actually did put a line here. So at some point I did look at this chart and I did put this dashed line at 17 cents, which is a nice support level. Share price currently 31.5 cents. Looks like it's at the top of the range maybe. So it looks like possibly this company trades in a range between 17 and 37 cents, a pretty big range. And it's been trading since 2021. So not much, I'm not a big fan of this. Now, the share price did pop up heaps on the 24th of January. So why did that happen? Up 64%, 24th of January. Why happened there? Western Energetics secures 3-year supply agreement. So that was a fairly significant announcement for this company. There you go. That's what I'm going to talk about when it comes to Aquirian. I'm pretty sure I do have this in one of my watch lists. Which one, though? Let's have a look. Aquirian, I have this in my mining services watch list. There you go. Igor says, you said you want to be a little less unbiased. Did you mean a little less biased? Yes. Yes, I want to be a little less biased. Definitely not a little less unbiased. I think bias is not a good, healthy thing. I think we're all biased, but I think you want to be as, what's the opposite of bias? You want to be as well, anyway. Opposite of bias is, I'm going to be so upset with me when I see this. Objective. Impartial, that's a good one. I want to be way more impartial. Kneppy says, are you the type of dude that eagerly waits for a mega massive discount sale before you buy your new laptop, desktop, monitor? No. So with the computer, I was just getting really peeved off with my current computer, and it's getting a little bit old. So I thought, that's time to buy a new computer. Funny enough, for my watch, my Garmin watch, I bought this on discount. So a lot of times I will look for discounts, and I won't buy something that I don't need unless I do get a discount. Now, my computer's a little bit different. I will buy that no matter what. So it all depends. It all depends. That's probably the best way to say it. Same thing when it comes to food. If I don't need a food, I won't buy it unless it's on discount, 50% off. Now, if it's something I need, like milk, I will buy that because milk is never discounted. I've never seen milk on special. I think that's an absolute truth. And I think that's because it's a necessity. Well, maybe not a necessity, but it's sort of like an everyday need. Bread, is bread on special? I think bread sometimes is on special. Like I do like this salad. I make this salad, so it has tomatoes, but it's not it's the sort of the Roma tomatoes. Also like Lebanese cucumbers, whatever it's called. Cut that up. Also have spinach, like the baby spinach. I love that. And then I put a little bit of bacon pieces and a little bit of chicken pops in it. But I never, when I do decide to make the salad, I never buy, if it's not on special, I will buy like the vegetables not on special. So it all depends. But yeah, my new computer, I didn't wait for that to be on special. I just bought it. Deb Shaw, okay. With a Pointerra, cash receipts fell significantly, though I still see a lot of potential in the services and technology they are offering. I still don't understand market reaction on one quarter results. Yes, but the way I look at this, and I see this also in America, the market tends to be more short-term focus. You might hear experts say the market is looking into the future. It's focused on the future, but I think it's not focused that far into the future. I think it's very focused on the short term. And with Pointerra, they even spelled it out. They expect their receipts in the next quarter or the current quarter to be matching the receipts 2 quarters ago. And if that does happen, I would expect the share price to go up. So that's, you do get, a good way to look at this is you do have an advantage over the market here, particularly if you're focused more on the medium to longer term. You do have an advantage over the market. The market's in the short term, focus on the short term, and you see this sort of reaction, you have an advantage. You can take advantage of this reaction. Also, could understand your view on this one. From a trading point of view, I understand, though, from an investment point of view, do you still think it's not a good company? Define good company. It's not. They're not profitable on an ongoing basis. So I can't really define Pointerra as a good company just yet. I think they really have to prove. Now, I think good and quality might be a little bit different here. So, for instance, I would classify Woolworths as a really good company, Coles as a really good company, Commonwealth Bank as a really good company. In fact, all the major banks as really good companies, but I will not classify those as quality companies. Well, probably the best way to say this is quality investments. That's probably the best way to say it. And the whole reason I say that is if you look at your investment goals, we want to grow our capital and protect our capital. And so what I'm looking for is how to grow my capital to the most effective way. And holding good companies may not be the best way to grow your capital. So, for instance, I don't expect much capital growth in the banks or Woolworths or Coles. And I'm looking for those companies that can grow my capital. But also I want to protect my capital as well. So that's why I'm tending to steer away from story stocks, companies that haven't quite made it just yet, because share price of those companies can be quite volatile, and some of those companies will go bankrupt more than likely. So I don't think, definitely, Pointerra is definitely not anywhere close to being called a quality company. But what about good company? I think it has potential. I think Pointerra has potential with what they're doing, but they still have to prove it to me they can get to that point. So I think it has potential, and that alone is why I'm still a shareholder of the company for the longer term, because of that potential, and I'm willing to trade it as well. And with this market reaction, I am really thinking now, because the share price fell again on Friday. I'm thinking, oh no, it rose. I'm thinking on Thursday. It fell on Thursday, yeah. So I'm thinking maybe around about the mid-5s is a good place to buy some Pointerra shares. Now, if we go back prior to the January or December quarter, share price did get to about 4 cents. So maybe that would be a good buying position. If I saw the share price fall to that level, maybe. But I do think there could be signs. Share price has bottomed. Share price trying to consolidate. And this one quarter could be just sort of the dip we're waiting for. And if they do indeed have a really good next quarter, they've hinted at it, the share price could take off, and maybe it'll get above 10 cents. Maybe. Anyway, I am looking to add to my position with Pointerra. Okay. Dev Shaw also says, hi, Kneppy, or he says Kneppy. Not sure if you have covered the recent FDA approval issue with Telix for their Pixlara, but if not, would like to know what's the impact on future price of their stock. I did look at it. I saw it. Share price pullback. I have no concern. No concern about Telix in regards to this issue. I think it'll be cleared up eventually. My biggest issue with Telix is like competitors, like Clarity. That's my biggest issue with Telix. But overall, I'm a happy Telix shareholder. I have no issues. Because they like Clarity won't have a product selling for quite a few years. So Telix has the potential to grow their revenue significantly more than Clarity. I mean, Clarity is still a storage stock. And yeah, the share price did drop a fair bit during that panic period in early April, and share price has almost recovered. So on that day when they released that FDA thing, share price dropped on the 28th of April. Share price dropped 6.6%. Share price has recovered since then. Share price up 4.75% on Friday. So hopefully no one sold on that day because they panicked with that announcement, because share price has recovered. Sometimes that happens to me. I too panic, and sometimes we all panic. Oh, this wasn't a long one. A lot of replies here. Oh, I've already answered this one, haven't I? Yes, I've already answered this one. And actually, the reason I want to talk about this one was one of the replies. Yes. Scott, actually, a couple of replies. Scott says, gas with sovereignty risk on market cap and nowhere near enough cash on balance sheet to a net. Sounds risky. Have you considered AGL? I too would like to know Kneppy's thoughts on your stock. So I haven't had a close look at PVE just yet. This is in my to-do list. But Ben Hutchison has, apparently. I took a look at their annual report after Kneppy mentioned today. The one potential catch I noticed was reserve size on silver, which IIUC is well they're producing cash off at the moment. Reserves dropped from 2.38 to 1.28 billion cubic feet during 2024. 2P declined 8.18 to 7.08. So they don't have years and years left on this well. I'm not a hydrocarbon guy. Anyone think this is problematic, or alternatively, is it expected normal? Yeah, so this is definitely one. Oh, by the way, yeah, the whole reason I want to point this out is great comments from Scott and Ben Hutchison. So I haven't had a look at this one, but yeah, great. I love this sort of comments. So we want more. We want more. I want more of your thoughts because, again, I haven't looked at this one just yet. What's it called? Po Valley Energy. A few comments in regards to my computer. So I bought my computer from Apple, straight from Apple. I looked around. There's no discounts anywhere. Yeah, so I bought my computer from Apple. There's another question here somewhere about my computer. What are the specs of your new computer? Why did you just buy So typically in the past, I would buy from Harvey Norman, JB Hi-Fi, also Officeworks, or Apple Shop. And that day, the 30th of April, I knew the next day was the last day of a Pennies 4Cs and 5Bs. And I thought, yeah, I don't really want to go out the house on that day. And it was supposed to be delivered that day anyway. So I thought I'll just order it from Apple and they'll deliver it to me. But typically, I actually do go to, maybe not Harvey Norman. JB Hi-Fi is getting more expensive. Sometimes we'll go to Officeworks. But in the past, I have bought my computer or technical product straight from the shop. What are the specs of your new? It's not a laptop. It's actually an iMac. So I can tell you exactly what it is. So iMac, Apple. Now, the only one thing I had against this iMac is the screen's a little bit smaller than the current screen. So it's a 24-inch. My current iMac is 27 inches. And I'll tell you exactly what it is. Which one? Okay, I can tell you exactly which if there is options here. I don't care about all that. Where's all the different computers here? Which one is the best? Keep exploring. Here we go. So you can see, yeah, 24 inches is the only one they have. I'm going to buy. I'm not going to buy here now. Just take your time. So I bought, where is it? This one here. So 10-core CPU, 10-core GPU, 24 gigabytes unified memory, 512 gigabyte storage, 16-core neural engine, 24-inch 4.5K Retina display, 4 Thunderbolt 4 ports, Gigabyte Ethernet, Magic Keyboard with Touch ID, Apple Intelligence. And that's what I bought, blue. In the past, I probably would have wanted a bigger screen. So they all have 24 inches. I probably would have preferred a bigger screen. I don't need a lot of storage. Why did I want this one? I wanted the 4 Thunderbolt 4 ports. I wanted the stronger computer as well. So the 10-core CPU and 10-core GPU as well. And the reason I didn't buy the one lower was the unified memory. I wanted 24 gigabyte unified memory. And that's the specs. Is that all you wanted? RAM, HD, chip, screen size. Yeah, there you go. Let's go back to, here we go. Stu Percy. Have been reading a lot about the amount of ships traveling around from China to the States and upcoming recession. This could affect the oil price negatively. Yes, it could. May I ask what you mean by negatively, says Scott, or asks Scott. Stu Percy then says, less oil used, the price per barrel would go down, and there are talks that OPEC may increase production. Indeed, but you implied bad for oil prices, so couldn't prices go down, be good, rather negative or bad in that case? My comment regarding share prices, oil companies early, absolutely right. So negatively, in a way, decrease in oil prices is good for everyone else. It's good for, everyone else. So it's weird that oil prices going down, negative for one set of people or oil companies, but positive for everyone else. But funny enough, during recessions, oil prices tend to go down. And it's interesting to OPEC. What did I read? OPEC was willing not to, they're okay with current oil price or something. So they're just doing nothing. I don't know. Ben Hutchison has had enough with Vection Technologies. I haven't read that email. About Vection and their capital raising. I think this was one of the worst capital raisings I have seen. One of the worst timed capital raisings I have seen. So I do have issues with this one. I've talked about this one a few times recently. So Vection Technologies released a really good Pennies 4C. Operating cash flow, free cash flow positive. The share price probably would have gone up 30%, maybe 40%. And then all management had to do was wait until the dust settled. Share price could be up 50%. And then they could have done a capital raising at like a 20% discount. But they announced that capital raising on that day. They released a really good Pennies 4C. After the share price has pulled back significantly, and it was a placement. There was no share purchase plan for shareholders. It was a placement at a 25% discount. And Ben Hutchison has had it with Vection Technologies. such a terrible cap raise shows management are not working for shareholders. Absolutely true. Sadly, there's a few microcaps like that at Void, in my opinion. Absolutely true. Either the management don't care about shareholders, or they're just getting bad advice. I don't know which one. If you have a look at the chart, it's just a really bad timed capital raising. In fact, if you have a look at their pennies 4C, they didn't need it. And there's a chance an investment banker got in their ear and said, in fact, now the share price is below the capital raising price, which was 0.1 cent. The share price has gone down. Look at how much it's gone down since they announced the capital raising. So let's have a look at their pennies 4C. So they announced where is it? The pennies 4C at 10:02 a.m. They went into training halt just before that to do a placement. And I saw this at pennies 4C and I went, oh, it's really good. So receipts, 12.5 million. Operating cash flow positive, 2.3 million. I can almost guarantee you the market saw this and it went, wow, what a great quarter from the company. Share price pop up 30, 40%, maybe even more. And then they announced, it just blows my mind they did that. It just blows my mind. And then a placement, an upsized placement at a massive discount. No wonder it's upsized, because he did it at a massive discount. They could have done a capital raising to shareholders a few days after the pennies 4C, and they could have done a capital raising at, I would say, they could have done capital raising at 3 cents, maybe even more than that, and they could have got a lot of participation in that capital raising. But a really bad one from Vection. Terrible, terrible, terrible. VBEd is starting to sound like Stephen Van Metre. So the US market is positive after seeing companies reporting good numbers for the January to March quarter. Why? Question mark. It's a good, I think this is good. Yeah, this January to March quarter is not when we're going to see companies feeling some impacts. It is reasonable to project that April through June quarter will be disaster. Maybe, I don't know. I'm up in the air about this one. I think there is a chance we're going to see some really weak numbers. Now, the very fact that GDP growth went backwards in the United States, I did not expect that. Now, there are reasons behind it, but I think there is a chance that we're going to see a significant drop in GDP growth. Now, this was going to happen even before the tariff or the potential tariff fall. So I think a lot of people are just focused on tariffs and not realizing that one of the reasons why United States did not go in recession was because of government spending. And they're pulling back on government spending, aren't they? Isn't that what they're supposed to do? They're pulling back on government spending. So even without the tariff fall, I think the chances of the United States going into recession were quite high. Now, Cathie Woods has come out being so bullish. I read her email. I get emails from her. Cathie Woods bullish. Yeah, we got another email from Cathie Wood. I spelled her name wrong. And she's so bullish. Oh, so bullish. I'm going to do a reaction to her Bitcoin article. There was an article released from ARK Invest about Bitcoin, like a bear, a neutral and bull case, and it's just ridiculous. Not as ridiculous as a Tesla bear, bull, bear case. No, bear, neutral, bear case, which is absolutely astonishing. I just goes, wow. If you actually believe her, you should be putting all your money into Tesla right now. All your money into Tesla, because Tesla share price should go up tenfold from here on her bear case. Not on her bull case, on her bear case, which is extraordinary. And I think it's, here it is. Cathie Woods ARK Invest makes boldly bullish Bitcoin. So I want to look at that article that she released. Anyway, so she's like out of her mind bullish, remarkable. She thinks there's going to be massive increase in productivity because of AI over the next, starting right now, I suppose. I think she's being a little bit too bullish, and I think it's very prudent to have to be a little bit more conservative in your outlooks. Anyway, that's her. So she's sort of like the complete opposite to Stephen Van Metre. Stephen Van Metre, for those who don't know, he's a good YouTube guy who's ultra bearish. And all you have to do is have a look at his titles on his videos. So let's have a look at the most recent ones. Japan threatens unthinkable US financial system faces shocking terror. McDonald's just dropped a bombshell, warning, I'm worried. Well, he's worried every single video. China declares emergency, frightening warning to the world. Texas collapses, nationwide crash imminent. This news will stun the world, markets will crash. So if you go back like 2 years ago, maybe not 2 years ago, if you go back through every single video, you would think, it's Armageddon. And look, this is frightening. What the fuck just happened? Oops, I swore. Whoops. Anyway, I'm not going to edit that out. Anyway, the next cycle of reporting will trigger a share market meltdown. I think it's possible. And it's really interesting because we did see two companies release good numbers. That was, what was it? Metre and Microsoft. But then the next day, we saw some really bad numbers come out from companies. And we haven't seen the negative reaction, have we? So we just seen the positive reaction from the companies, two companies. And I think I'm starting to think there is a chance that this little bull run, this little bullish period we've seen, I think this could be the bull run before, short-term bull run before we see the markets collapse. I think that is a possibility. So if you have a look at the S&P 500, Dow Jones, NASDAQ, even if we go to, say, some of the international indices like DAX, you're getting to almost back up to where it was before. This screaming, this is the start of a potential meltdown. But I think we need to see some bad economic news, some really bad economic news before we see that. Even the SEO, it's just an insane run we've seen. I think the market is forgetting the potential economic malaise we're going to find ourselves in. I don't think I'm as bearish as VBEd though. I don't think I'm there yet, but I do think you do have to be wary in these situations. Scott says many analysts are suggesting weak December quarter into a 2026 recession, but likewise, those same analysts are already pricing all that in. At this point in time, I don't think anyone's pricing any sort of recession in. If they were, the stock market would not be going up like this. Yeah. VBEd also says, I agree with you, the American stock market attracts investors from all over the world. I feel that will dry up. I'm personally looking at investing in ETF funds, focusing on India. I think that's a very smart thing to do. I think India is going to be the next big growth market. So I'm not the big fan of ETFs, but this is the sort of ETF I'd be looking at because I can't invest in individual companies in India. But I can. There are Indian ETFs. Scott, thanks for the deeper dive on Po Valley. Well, I want to do a more deeper dive. It'll be interesting to know how scalable their operations are and whether taking on some debt as leverage to crank up growth would be a fair idea in achieving that scale. So this is a case where this company is in production, nice cash flows. I'm not sure about life of mine life. But what are they going to do? Very important. This comes back to capital allocation being the most important decision, the most important job management of company has to do. So you might say maybe culture, but in my opinion, it's capital allocation, particularly for profitable companies. Now, for a storage stock, capital allocation it's not as big, but it is important because Vection Technologies, I think their capital allocation, capital raisings is really bad. But when you have cash coming in the door, what are you going to do with that cash? Really important decision. It can change the fortunes of a company if you make the wrong decision or the wrong decision. So what is Po Valley going to do? Do they have any plans? That sort of thing. I'd love to know what their plans are moving forward. And that is why for a company like Kaiser Reef, obviously, they had a plan. They had a mine, and maybe they were thinking, maybe this mine is not enough. I think it was in Victoria, and they were maybe looking for another mine they could purchase from like Catalyst, a bigger miner, and they've potentially found a mine that could turn that company around. Maybe not turn around, but could be a catalyst for creating a much bigger company in the future. So I have no idea. That's one thing I'm going to do when it comes to Po Valley. What are their plans? Do they have any plans? Okay, and Nick Daly, Kneppy, what 3 stocks would you consider to be the highest quality worldwide. Wow, what a question. So in a way, if I had to choose 3 companies right now, and I can only choose 3 companies right now, what would those 3 companies be? Now, this is regardless of valuation. So if there was no, if I just ignored valuation, just assume all companies in the world are valued where they should be. Exactly, they're all valued fairly. So that is actually a big. I actually would I put Pro Medicus there? Probably not. Probably not. I'm trying to think of any ASX companies I would put near the top. Probably not. Now, I would think the highest quality companies in the world would be American companies, American technology companies. Now, the problem with that is history shows us that when a company becomes really big, too big maybe, when they become the biggest company in the world, they fall away eventually. And then another company comes up underneath, and then they become the biggest company, and then they fall away. And then we just have this cycle. But a lot of these American tech companies are looking to the future. And what they're doing now when it comes to AI is really exciting. And there is no way I have investments in all these companies. There's no way I'm going to sell my stocks in these companies. Some of these companies could be 10 trillion companies in the future. I think some of these companies will eventually be broken up. I think that's going to happen eventually. But I think there is a lot of potential that we're going to see these companies go significantly higher when they are, from where they are right now. Which ones would I choose? I'd probably put Apple down below. So I wouldn't choose Apple. Microsoft. So Microsoft. I probably wouldn't choose NVIDIA because they don't really create any, well, they do create stuff, but they don't, if you know what I mean, they just provide services really to other companies. That's probably the way to say it. So I wouldn't choose them, but they have experienced some fantastic growth. So Alphabet, Microsoft, Microsoft. Would I put Amazon there? Am I forgetting one? Let's have a look. Actually, biggest stocks by market cap. Here we go. Microsoft, Meta, oh no. Berkshire Hathaway. Well, the problem with that is that Warren Buffett's going to die eventually. TSMC, no. Tesla, no. Walmart, no. Microsoft, Alphabet, and Amazon. That's it. Microsoft, Alphabet, and Amazon. Maybe, no, not Eli Lilly. Maybe Visa, Mastercard, not Netflix. Yeah, Ali, no. I'll pick 2. No, I'll pick those 3 companies, yeah. Highest quality worldwide, definitely, yes. And I think some of those companies have the potential to be huge in the future because of what they're doing with AI, that sort of thing. I don't think we understand just yet how AI will transform our lives in the future. I could definitely, someone could say to me Tesla, particularly if they're robo-taxis, what they're called, automation, if that becomes a real thing, that could drive significant growth for that company. That's the only reason I'm interested in Tesla is because of that particular technology. But hey, you have to understand that Elon Musk has been talking that up for many, many years, and he's way behind. If you go back to like 2016, he's way behind where he thought Tesla would be right now. So a lot of great companies there, high quality companies there. Okay, that's all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.